Is this the most unpredictable market the world has ever seen? Oh yes, indeed. What events will likely affect the market in the short term, and what events could potentially affect the market in the long term? Hello, I'm Crypto Casey, and welcome to an episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. If you are interested in seeing more content like weekly curated news and how it affects the crypto markets, please let me know by liking this video, subscribing to my channel, and clicking the bell notification to stay up to date on all my latest videos. Before we get started, just want to do a quick shout out to NordVPN. As a crypto investor, using a VPN is an easy, effective, and important way we can further protect our investments, our data, and our privacy. I've been using them well before I even started this channel. And for a limited time, NordVPN is offering us their 2-year plan at a 70% discount plus 1 month free. So scroll down to the description area below to check them out and redeem their offer. There is rampant scamming activity happening in the finance and crypto space right now, with people and bots creating duplicate social media accounts of influencers and educators in the financial space like myself. The only official accounts that I have are listed in the description area of these videos. Anything not listed in the description area of these videos is 100% a scammer. I will never direct message you. I will never ask you for money or crypto. I will never ask you to install profit generating or mining software on your computer. I do not offer consulting services. I do not offer investment services or anything remotely similar. So only use the links in the description area to access my only official accounts. And please make sure to report any other scam profiles that try to follow you and message you, because their only goal is to steal your money in crypto. So stay vigilant in these crazy times, crypto fam. Awesome. Let's check out Crypto This Week. Monday, February 28th, 2022. $300 million in crypto liquidations accompanies Bitcoin surge to 44K. A two-phase surge sees Bitcoin US dollar add 15% on the back of continued macro market turmoil. Many people thought Bitcoin's massive price movement was due to Russian adoption of Bitcoin, as the ruble, their fiat currency, plummeted in value following the announcement of sanctions. We will touch on that in more detail about how and why that wasn't the case in a minute. Instead, Bitcoin trading was up above 44K in an apparent short squeeze. Bears placed a gamble on the future price of Bitcoin being lower than it turned out to be at the end of the month, and they were forced to buy back their positions as quickly as possible, regardless of the price, in order to mitigate losses as much as possible, causing the spike in the price of Bitcoin this week. And at the time of this video, we can see here on the 7-day Bitcoin price chart that the spike was short-lived. Cool. So as we've discussed in previous videos, over 70% of crypto trading activity is done by big institutional investors who treat cryptocurrency investments the same way they treat on-risk traditional investments like tech stocks. And the price of Bitcoin is determined by traders in the market. Whatever people are willing to both buy and sell Bitcoin at actively in the market, along with supply and demand, determines the price of Bitcoin at that particular moment in time. When we choose to buy and hold Bitcoin in our own cryptocurrency wallets for long term, this does not affect the price of Bitcoin. Active buying, selling, and trading of Bitcoin determines the price. So as long as big institutional investors make up the majority of Bitcoin's trading activity, and they continue to treat Bitcoin investments the same way they treat risky tech stocks, we as crypto investors need to learn about how the traditional financial system works and stay mindful of events that move the traditional markets. So what's moving the traditional markets, and by proxy, the crypto markets this week? Let's check it out. 1. The release of the February U.S. jobs report. America added 678,000 jobs in February, smashing forecasts. It was the best month for job growth since July. The nation has 2.1 million jobs to go before hitting the February 2020 level and recouping all positions lost in the pandemic, the Bureau of Labor Statistics reported Friday. Nice. So this report can be twofold. 1, this particular report is bullish in one way because it indicates we are undergoing more market recovery post-pandemic. And 2, average hourly earnings stood at $31.58 last month, just 1 cent higher than in January, breaking with the trend of recent months. Why is it seen as bullish by institutional investors that wages did not increase as much as previous months? While the market has been worried about increases in wages coupled with increases in inflation, which would create a wage price spiral. What is a wage price spiral? Wage price spiral is a phenomenon where as prices of goods and services people need to live increases, workers start to demand increases in wages to keep up with inflation. But then as labor costs increase for businesses, it causes them to increase the prices of their goods and services to maintain profits. This creates a spiraling effect, like a circle where increased inflation leads to increased wages, which leads to further increase in inflation and then further increase in wages, etc. In this latest jobs report, this pattern finally broke. So wage increases did not exceed inflation, which curbs the market's fear of a potential wage price spiral scenario for now. For now, because we haven't seen the February CPI or Consumer Price Index report, which will give us the latest inflation numbers. In the last report for January of 2022, inflation surged 7.5% on an annual basis, even more than expected and highest since 1982. Ouch. So this Thursday, March 10th, the latest US CPI report will drop and of course rock the markets one way or another. Something to keep in mind is that before Russia invaded Ukraine, the markets were terrified that the Federal Reserve was going to increase interest rates by 50 basis points, which was way more aggressive than anticipated. However, on March 2nd, Federal Reserve Chair Jerome Powell, balancing high US inflation against the complex new risks of a European land war, said Wednesday the central bank would begin carefully raising interest rates at its upcoming March meeting, but be ready to move more aggressively if inflation does not cool as quickly as expected, which it looks like is doing just the opposite, heating up quite substantially as wheat and corn prices surge amid Russia's invasion of Ukraine. Ukraine is a big exporter of wheat, and now it's up over 70%, which is the highest it's been in 14 years. Oil price jumps to nearly $114. Natural gas prices reach record highs. So oil prices are surging to all-time highs. Home price appreciation reaches highest level in at least 45 years. Nationally, home prices increased 19.1% in January 22 compared to January 2021. And as if it couldn't get any worse, US house prices are expected to rise another 10% this year. Yeah, yikes. So we shall see what the February CPI report holds on March 10th. But it's not looking good thereafter at the moment. The big date the market has been waiting for all year is March 16th, which is when the Federal Reserve will announce either a 25 basis point interest rate hike or a 50 basis point hike may still be in the cards, but I'm thinking is not likely. Or something that could also be in the cards, kicking the can down the road yet again and not raising rates at all. That would be very bullish for crypto, but at this time, I'm not thinking it's very likely either, but we shall see. Alright, so let's wrap things up by taking a look at the Russian-Ukrainian war's effects on crypto. In his March 2nd testimony before the House of Financial Services Committee, Fed Chair Powell says war underscores need for crypto regulation. This comment was in response to a question regarding sanctioned countries being able to bypass financial restrictions using cryptocurrency. Let's explore the role cryptocurrencies have played with regard to the war thus far. Ukraine has raised more than $54 million as Bitcoin donations pour in to support the war against Russia. Nice. What about Russia? Crypto is helping both sides in the Ukraine war, but it won't save Russia from sanctions. Why is it so? Well, Russia tried to isolate itself, but financial ties called its bluff. The United States, Europe, and their allies are not launching missiles or sending troops to push back against Russia's invasion of Ukraine. So they have weaponized the most powerful non-military tool they have available, the global financial system. Most of global commerce is carried out in dollars and euros, making it hard for Russia to avoid the currencies. And as much as half of the $643 billion in foreign exchange reserves owned by the Russian central bank is under the digital thumb of central and commercial banks in the United States, Europe, and their allies. While there has been speculation that Russia could mute the fallout of sanctions by using its gold reserves, turning to Chinese yuan, or transacting in cryptocurrency, so far those alternatives seem unlikely to be enough to forestall financial pain. In some ways, Russia's effort to break free from the dollar shows just how hard it is to get away from the world's dominant currency. And considering this fact, circling back to when people thought Bitcoin's price increase this week was due to Russian adoption, the reason it wasn't and it won't be for the foreseeable short or longer term is that a lot of people don't have extra money to use for investing. Unfortunately, most people are living paycheck to paycheck and need money to convert into goods and services now, not buy and hold Bitcoin for later. So as Russians did turn to cryptocurrency in an effort to save whatever value they could from the plunging ruble, most of it was definitely converted to stablecoins, pegged to the value of the world's dominant currency, which is the US dollar. And the same with Ukraine and Russia. Any cryptocurrency they receive, they aren't holding it. They need to convert it into a usable medium of exchange to fund war efforts, which is the US dollar. Now that Russia is facing massive financial restrictions and sanctions, converting cryptocurrency into US dollar will not be an easy feat for them. So what's next in the geopolitical timeline? Putin says Western sanctions are akin to declaration of war. And when Vladimir Putin escalates his war, the world must meet him. Muttering nuclear threats, Russia's president vows to prevail in Ukraine, whatever it takes. Bearish. So basically, we are looking at one, a somewhat isolated war that will fizzle out, which I think, given the current geopolitical landscape, is not likely. 2, a potential second Cold War where all the larger global powers flex and threaten nuclear war, and in the end, whatever version of an Iron Curtain that developed is dismantled and dealt with. World War III. All of these scenarios create a lot of uncertainty in the markets, so as we've discussed earlier, I expect Bitcoin and crypto at large to behave the same way tech stocks do in the face of uncertainty, which is tumultuous. Again, this is by far the most unpredictable market the world has ever seen. There are a ton of variables at play, and at the end of the day, it's anybody's guess at what's going to happen day to day. Until next week, crypto fam, awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video and subscribe to my channel for more crypto content. Also, click the bell notification to stay up to date on all of my latest videos. So what do you think this week's CPI report holds? Are the Feds going to hike interest rates moderately, aggressively, or not at all? Are we on the brink of World War III? Let me know in the comments below. Be safe out there.